Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Mallinger with The Street, and together we bring you a morning call. Scott, what a giant tease that was. But I think what we're seeing is, in terms of identifying trends, when we see these numbers come out from the Fed, the ECB, Bank of England, traders are letting the print come out, and then they're really not doing much with it, as we just saw in the latest action at 7:45 a.m. The key is going to be the Q&A at 8:30. So it's like people aren't being as reactionary as they used to be, and actually there's some thought process here. So.
Right, they're not just being impulse.
Right.
Because I was sitting on my desk, I was like, let's do the morning call express early.
I gotta get there.
I got to be there like 7:45 because I have positions, I got to manage them. I'm like, all right, and market said go. And then it's like the bulls and the bears stare at each other and says, what do we do now? No one's moving. But again, I think it's really just the fact that they want to see what's the plan.
And not only that, at 8:30, we also have retail sales coming up. I'm not sure how big that's going to be because all the retailers were just reported last week, so I think a lot of that is out there. But also at 8:30, we have jobless claims. So there's three key things that we're looking at one specific time alone.
Right, but again, it's really, it was all eyes on the ECB.
Right.
Because now, like with the no action from the Fed, people don't know what they want. Do they want a stronger economy, or do they want to see numbers start to really decrease, so then the Fed might have to do something in September? So it's like the market action is just going to dictate where we go, and it's like the same chop fest. There are some strong stocks out there acting very well that you could buy. There are weak stocks out there that are setting up for lower prices. It's a very, very choppy environment. If you take a quick look at the chart of the S&P, you'll see that we are holding higher. We've been this methodical ascending channel the entire way, going from the low end to the high end, to the low end, to the high end, to the low end, blah, blah, blah. P.S., this is where we are right now. So we've had a controlled 3-day pullback after the Monty-inspired rally last week. And the question is, do we hold and go sideways and continue? Has something changed? And as of right now, it seems like it might have. But right now, my line in the sand here for a momentum guy, 1373. We start breaking below 1373. I think that you will see some fast money like me leave. 1360 is an area where this range goes back to neutral, where you're not like pent up to the upside, you're more neutral here. And if we start breaking 1360, then all of a sudden we're going to start talking about, are we going to retest the bottom end of this range, which is the pattern that we've been in, since the June 4th lows. And again, we're heading into August, and I know a lot of people going on vacation, so it's going to be interesting to see the way it sifts out. It's
just so hard to try and identify trends because you're looking at all your ranges, but there's really no benchmark based on how we've traded. This is the most unusual sort of patterns that we've seen in our entire careers.
Well, it's just like everyone's thinking. Actually, everyone thinks it's kind of going to change. And if you look at the chart, it's just been the same since June. And we're heading into August. We're going into the third month. And people are like, it has to change. The news is so bad. We're going to break this trend. We're going to go to the downside. And then we get to the upside. Oh, there's so many pent-up shorts. We're not going lower. We're going to go higher. And then we stay the same. So it's almost like the trend is that the trend is not changing. And it's frustrating. Momentum guys that want momentum to the downside, and momentum guys that want it to the upside. So right now we could take what we can get, make a little bit of money. It is a summer. Let's just get into what's weak, what's strong, and see what the action's doing.
Well, speaking of frustration and lack of investor confidence, we have to take a look at what happened on the exchanges yesterday. At the market open, 148 stocks went completely haywire as there was a trading software glitch out of night. We're going to take a look at that ticker, but I think what the big concern is, outside of what we look at each day for momentum traders, even the retail guy, because we do a lot of work with investors in that particular group, they've got to be asking themselves, how many more debacles do we need between flash crash, you've got your Ponzi schemes of the world, you have your issues with the CFTC and futures markets. The last thing that we need is this detracting away from that retail long money, because those guys come in to bring money to market. They don't come in to short it.
Right, but people that are clients of Knight, they didn't lose money because of the Knight mess up. Knight itself lost some money. That 180 million or that 300 million, whatever the number is, was their fault. It was an algo program. So these algos, if you're going to have them, you're going to love them at times, they're going to make you money, and they're also going to go haywire because they are computers. And as a professional manual trader, I see it every day. I see the lack of liquidity. I see bids disappearing, and I see that getting picked off. They do it all the time. So yesterday actually was like people revolting. Prudent traders that know these stocks, they actually were able to make money. There are guys on my floor that knew Deere shouldn't have been up 3 points, so they got shorted. BG shouldn't have been up 3 points or 2 points. That Colgate just had a move and it was out of nowhere. And then also smart guys saying, you know what? These things are Knight's fault. Knight's going to lose a lot of money. Let's short that stock. So the mind and the actual prudence of experience took over from programs of the computer, and that's why this market will never be one big HFT, one big computer, because people are ultimately going to stay with this market, and we're going to be here forever, and computers will just be facilitating it.
So it's like goes from the rogue trader to the rogue algo.
Yeah, exactly.
So, well, let's take a look at KCG real quick just to see. I mean, outside of what happened yesterday and it took that huge hit, what was the range like? Was there even an opportunity there, or was it like kind of a sleeper stock at that point?
No, when it started on boiling down, and the news was that that they put out orders for what should have been 5 days and 5 minutes,
right,
and the stock was down at like 9. I was on my radio. I'm like, guys, maybe we should be shorting night. And some guys did, some guys didn't. If you look at the chart at night on a daily, the daily's been very weak. The daily, before this even happened, started breaking down right here. And then it was hanging in there. And look at this move from 10. Technically, as soon as it broke this low here of 992, it got crushed. I remember, if you look at your time frame in your 3-minute chart, it was right around here, okay, when everything started going haywire. And I was like, it was like right around this $9, exactly right here. I'm like, you know what? I'm like, Knight's going to take a huge hit. They're not going to maybe be able to handle it. Maybe it's a short, and I hate, take advantage of a bad situation. But PS, technically, once this broke below $9, it became a good short. Look, bear flag, pole, flag, continuation. Then it tried to wedge again, and then it continued to the downside. So technically, Knight was a short all day, and if you used a little common sense and a little bit of your experience as a free-thinking trader, not as an algo computer, you made some pretty good money.
Right. So moving along, let's talk about the exchanges. We're going to look at the New York Stock Exchange Euro next. I think this is really interesting. We heard this a lot on CNBC with Art Cashin yesterday. At the end of the day, you still can't take people out of the equation. Computers can't sense emotion. They can't sense. Something just doesn't seem right. They just completely trade through all their triggers and so forth. So I think, again, this does lend to the institution, especially following like what happened with NASDAQ and the whole Facebook mishandling of the IPO.
Yes, and that's why.
And I'm surprised I didn't catch more of a bid on the stock.
You mean NYX?
Yeah.
Well, I think just because it's emotional and sympathy. So if you look at the chart here, as far as NYX is concerned, you had an ascending channel from the loans. The exchanges have not been the place to be in this market. They haven't leaded. They've actually been laggards. And when Knight broke below, NYX broke below this 2540. It also was a decent short. So I think if it was emotional, okay, it's going to reclaim this area and come back in. And if people think that the NYX is going to get stronger because of Knight getting weaker in some of the other type of scenarios, this should not continue. We should not trade below today's low or yesterday's low of 24.72, and you shouldn't see some more downside action. So if you're going with the thesis that this is going to help the NYX, it better not break today's low and continue, because technically right now it looked like it broke and it has more downside action. So right now, here's your line in the sand where, it has to get back above this very, very soon to show that yesterday was meaningless.
All right, let's move along to NASDAQ. Again, this one was actually changing composure, and we sort of saw more of an ascending channel. But of course, yesterday, trading in sympathy with what happened with the whole Knight debacle, it came back in.
Yeah, this looks very similar to NYX. Not as tight, a little bit more loose. So if you look at the chart pattern here, it didn't actually break it. It's still in this channel that you said, big move. Remember, we talk about outside days. I'd just like to show you something. I haven't seen this in a while, but here is when it tried to break out, and pow, look at that wide range bar right there showing you that it wasn't ready. This is a sell signal. Then, you had this trend broke to the downside, then it broke support right here. Now it's been coming off the lows. So I guess this one didn't get as damaged because it's it's NASDAQ versus Knight. So we'll see what happens here. But I wouldn't be in any rush to buy any of these things.
Right. Same thing even too if we take a look at CME. We've had a lot of issues, again, with another mishandling of accounts with PFG. We saw that with CME because, again, this is the whole CFTC futures regulatory issues that we're taking a look at. And again, this stock just can't get out of its own way because of issues even like bigger than the exchange.
Yeah, and I just think also everyone complains about the volume. How do people make money on the exchanges with volume?
Right.
So just the business is not the same business. We all keep talking about how trading has changed, the business has been changing, and you see it in some of these exchanges. And if you look here at the chart of CME, you could see it's coming back into some really big support. Okay, if this breaks right here, if this breaks this 50.66, you're going to see more downside. So this looks more like a short than a long. Obviously, it's we've been trying to get momentum to the downside in various things, and it's hard. But if this breaks this area, you're gonna have a move down to probably at least 48, if not lower. So if you're long this stock, make sure you're playing versus support. And if you're looking to get short and you see relative weakness here, that's a candidate.
Well, if we look at the best house on a bad block, we could take a look at the CBOE. This one has been performing a little bit better. You have to think about it. All of that equity and index option volume, which is really, we've seen a lot of moves from equities into this particular type of asset class. And you have to remember, too, they have all the volatility-based products in the VIX, so we're seeing a little bit more healthy trading volume on the CBOE, and the chart is kind of indicative of that.
Yeah, and this one is well off the lows, and it's actually closer to the highs. And we're a CBSX broker-dealer, so if you're watching, thanks everyone. Anyway, the chart's acting okay, and you have an ascending channel here too, but from a higher level. So if you take a look here, you will see that a few different things happened. Where first, look at this major move to the downside, and this is when it woke up. This was your igniting bar. It broke this pattern here above 25.50, and then since then you had a powerful move, and then it's been kind of following this last breakout, this somewhat of an uptrend. So I would stay with this until it changes. This 28.12 to me would be big support. We talk about high level supports and low level support. If you're not committed to the CBOE, it starts breaking below 28, I would say be very careful. But as of now, it's above the moving averages. It's near this prior high. This is the best looking chart out of all the ones that we just went through.
All right, and speaking of the CBOE, just for a quick shameless plug, Russell Rhodes and I from the Options Institute, we're doing another free webinar for all of our listeners out there. On Thursday, August 16th at 6 p.m., we're going to talk about 10 different ways to use weekly options, and I know a lot of the T3 traders have been getting into that, so definitely make the effort to sign on for that. Let's jump into a quick commercial. When we come back, we dive into the trenches.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.
Welcome back to the morning call. We're going to dive into the trenches and take a look at names that are susceptible to the ag issue that we have going on domestically here. Unless you've been under a rock, we've been stuck in a really bad drought here in the U.S. and it's really starting to affect crop prices. Scott and I have been talking about the ags and the fertilizer since November 2011. You know our thesis here. So let's take a look at some derivative names off of that. The first one being ADM. Came in with the quarter, they beat on revs, they missed on earnings, and margins were totally affected. Don't think it's going to get much better for this group going forward until we figure out how this drought situation plays out.
Right, so there's no reason to jump in there. And if I'm looking at this chart, I don't trade this stock. You look right here, is at new lows or lows of this recent move since the top in May. And we closed dead on the lows, no reversal pattern. I guess this is where they had earnings, gap down, no free pass there. You go to your weekly chart because you have to go back. Anytime you have to go back to the weekly chart, that means things have been really coming in. And if you go here on the weekly chart, it's coming into bigger support. You go across right here. And we're still a little bit above that. I would say if you're looking to buy this, which I don't know why you would be yet, the low here is around 23.69, so I would wait to see at least if it could hold this weekly support that goes back a few years. I wouldn't be jumping in right here. It's a little bit of no man's land.
Smithfield, ticker SFD, another one in the same situation where, again, they are so affected by the input cost, which ultimately affects margins, and the charts are confirming that, this one is a little bit closer to its 20 DMA, so is the story any different here?
No, this one's near the lows. It just didn't break to the lows. So people looking to short, like if we turn lower in the markets, this relative weak group will probably be something on people's radar to short because it hasn't shown any type of reversal pattern. Maybe if the weather changes and things come drastically, we see an igniting bar, kind of like we saw a month or so back when all of a sudden the trend changed in the ags and you could have positioned very well for what Jill was anticipating, a great move, over the course of the summer through the fourth quarter. But here, we haven't seen it yet. So if you look here, it's coming into some big support. I guess you could trade it long versus 18, but this was a big move to the downside. Hasn't been able to bounce at all. No one's thinking this is on sale. You go to your weekly chart here also, and you'll see that look going sideways. It's not even like in the depth of the depth. Not saying it has to be, but this is very big support here around $18. It breaks $18. I don't see anything on the weekly chart until coming into this like 15. So at this point, I still think it's an avoid, and no need to anticipate it until we see some type of igniting bar phenomenon change, which we haven't.
So shifting gears from the producers more to the end user side, we're going to take a look at McDonald's and Starbucks to round out the trenches. And what's really interesting here, this has been a fabulous trading vehicle, both these stocks for us over here at T3, and they were market leaders. So it's really interesting to see how the composure has completely shifted around. Let's take a look at McDonald's to kick it off, because overseas sales are really becoming a concern for this company.
Yeah, and the stock has been technically broken for months. And it just goes to show you that you need to trade these intermediate trends. And as good as a stock acts, or the name or the name recognition, everyone says, oh, but this will come back. It has to come back. It's McDonald's. There are times and places to be in it more or in it less. And we've pointed out many times how the trend was changing, and it was breaking, and lower highs, blah, blah, blah. You look at the chart here now, and you'll see, ever since this, this 2-day time period when, it sliced this last somewhat of an uptrend here, it was slowly wedging, or slowly following this downtrend of lower highs. And finally, it broke below this 95 area, which was your sell signal at the time too. I think it was also the 200-day. And now, it has another, what's it called here? There were some trades here actually. If you remember, we traded it through this 90 area. It was okay, and then it kind of failed. Here's your gap down. Okay, so now this is where we are here. This is your gap down. This is open. Right now, still the sellers are in control. Can we get back into the gap and close it, which might mean that it's not as weak, but at this particular point, here's your inside range. And if it starts breaking back below 80, this you might have to go to your weekly chart too and see that there's no real big support until you come down here around 80 and change. So right now it's trying to hold in there, but this chart to me still doesn't look like anything special. And actually look at this trend. This broke right there. It's pretty clean as if you look at it on the weekly chart. So now I still think it's in a void. All
right, let's wrap it up quickly with Starbucks. There might be some cute shorting opportunity with this one.
Now, at this one, I actually think I'm looking for a red dog reversal now. 2 days ago I said, the time to be short and the time to have sold is probably behind us. You look at the daily chart, the stock's been battered and bruised, and you go here first to the daily, and you'll see. Remember this, this potent reversal. I call this a king and queens pattern, where you have a big move that gets negated. And then ever since then, it came down, couldn't really rally back up. It was hovering on support. If you did not want to get out of it, in this range, once it broke this level here, we talked about it a lot, 50-50, it's been just to the downside. So now this was your last bear flag, tried to pause after earnings. It was a short below this 46.12, and now you have 2 days to the downside. I would say today, watch 43.70. So if, the way the drill goes, if it starts flat, trades below 43.70, has people get stopped out, comes back above, and puts in that tail there as a red dog reversal, then maybe we get some kind of cute trade for some type of reversal pattern to then come up and retest this gap. But for right now, it's still broken. Lastly, you go to this weekly chart. On the weekly chart, it just took out a lot of this past range. It's coming into some support here. So at this point, I would say between 40 and 43 is probably a better time to buy versus sell. You had your time to sell already. Now it's just a little bit late.
All right, let's move along to quick hits or some quick cash. We're going to take a look at Apple above that $600 level.
Yep, Apple had a nice 4-day move, went from into that gap, 580, 80, went as high as almost 617. Yesterday, a lot of my guys, including me, we said, let's short it the first time it gets there. Didn't hold for the majority of the move, and then it held the gap. So right now, I think with a few days of inside action, it can get going again. You look here at the daily chart real quickly, and this is a little box. It failed right at this trend line, right at resistance, but held this gap. Right now, I am long Apple, and I think that, short term, it'll make it really easy to hold if it stays above yesterday's low of 603, but if it breaks 603 and fills this gap, I would say the line in the sand for this to really continue to be strong would be around 596, 597, and if this holds, I do think at some point we're going to break above this trend, and I will definitely want to be adding to that above 617 to 620.
All right, let's shift gears from an outperformer to a real stinker. Facebook and the rest of the social media group cannot get out of their own way. Is this an opportunity to buy here, or just completely stay away from it?
At this point, there's been no reversal pattern. Right. I tried it yesterday. it purged down below 21, looked as if it was going to try and reclaim 2160, and then everyone on fast money started bashing it again. So many people on fast money. No, I'm not even fast money. I'm not going to. They're good at what they do, very good. But I'm saying like a lot of the analysts that got their clients involved at 38, or analysts that have their people in the private market at 32, 33 that aren't allowed to sell to 36. Now they're saying it's not a real company, or it shouldn't have been where it was. But it wasn't like that when they sold it to people.
Well, gee, thanks for the advice.
Right. Thanks for the advice. Now you don't like it, but you got to hang out in there for another 2 months.
Let's downgrade it now too while we're at it.
But then one of the signs that it was still that week was Bernstein, came up and upgraded it. It was up 15 cents, and then boom, sold. So you look at the chart here, and I know I came out with this strategy right around here saying it was starting to act better. You had, this big move off the IPO. It started to round up, looked like it was creating a handle. And I said, let's try it long here. If it gets above, the real price here would be above 33. It wound up breaking below 30 and a quarter. This was my stop. This was my out. This is a great vehicle, or great lesson to be learned, that you could have an idea, and if the market doesn't confirm it, you take a loss. I sold 30.50. You know what? I had to say I was wrong. I'm allowed to be wrong. We're wrong every day. And now look at it. If I tried to make excuses and say, well, it's going to happen, it's going to be okay, they're going to monetize their mobile, they're going to do this, they're going to do that, you know what? I'd be probably jumping out of a window down here at 2088. So anyway, with that being said, I'm going to watch it again today. I think everyone's going to watch it. You have a low. This is 2084. If it breaks below that and continues to the downside, I'm not going to touch it. The only way I'm going to touch it is if you get some kind of pattern where it breaks the low, comes back up, and tries to put that bar in. It did it here, and that wound up giving you a 5-point move off the lows. And now at this point, I think it's going to have to get really, really dramatic and really purge everyone out and have something, very, very like blaring to say, okay, now we have a reversal. Look at the huge volume. Everyone just threw in the towel, and I don't think everyone's throwing in the towel yet.
Yeah, my God, if that thing becomes a teenager, it's just going to...
I mean, it could be today,
today, as soon as we open. Anyway, moving along to some strength. It's like a roller coaster ride today. Pretty ugly, pretty ugly. We're going to move into healthcare. Those of you that follow Actions Alerts Plus with Stephanie and Kramer, you've seen some new rotation into healthcare sectors. Or starting to look at some new names. Pfizer, they've been involved, but this is another one where, it's kind of performing well, paying that nice healthy dividend, and momentum traders and longer-term investors are getting rewarded alike.
Okay, not much to say there. It looks like a good investment. Stay with it as a trade. It doesn't have big moves, but I think you could hold it.
All right, one more. Speaking of going to be a teenager, JCPenney. Oh. Wow.
JCPenney's, I've tried to trade it. I've tried to catch a bottom there a few times, and it still can't find a penny friend. But anyway, that wasn't a good joke. So if you look at what you could have seen here, obviously it was in this downtrend the entire time. You had your gap down, and we talk about gaps that don't get filled. This one didn't even get tested. So when this gap down and couldn't even come back up to retest it, that gave you clues that it was going to continue to the downside. So 26-ish was another decent sell. Came down. It's desperately trying to break this descending channel. I think we caught a trade a little bit in here. I remember we were talking about that blogger who actually ignited, I think, this bar, and now we're right back in here. I think that... Who
is a paid JCPenney consultant, by the way.
There you go. Someone should look into that.
Exactly. So.
And anyway, I think it's an avoid. It's just it's not an investment yet. It's just a trader back and forth. There's a huge short position, and let it pan out.
Let's wrap it up with YHOO. Yesterday, you were active on the Twitter feed saying, this is something I haven't taken a look at in a long time. I mean, the stock really hasn't done much of anything. So what are you seeing here now that makes it look more compelling?
I just see a long channel. And I'm not saying it's going to do like what Walmart did when I came out in December and said Walmart's my retail stock of the year because it was in a decade channel. It absorbed the move from like 18 all the way up to 60s, but whatever. As I look at the channel in YHOO, I see something of consolidation. I see institutions in there buying shares, changing hands, it getting tighter. I like tight patterns. So if you look here at the chart, you'll see ever since what was this? It was like almost 2 years ago. It's been in a range between 14 to as high as, what is this? It's like 1640. And going sideways. They've had some good numbers, some bad numbers. People haven't really cared at all. And now it's coming up to the top end of the range. You saw AOL break out. You see some content plays getting a little bit better. You see some attention here with the Olympics, getting it early. It's holding higher. So I'm like, what? I'm going to give it a small shot. So I'm in tier 1 here. But the real trade for it to get going, it has to get above 1620 with real volume. And I don't know what the catalyst is going to be there. So I'm in it for a small trade. My stop, everyone listen, we all have stops. 1570. If it goes below 1570, that means it's coming back into this channel, and it's going to happen at a different time. I'm not an investor long-term in YHOO. I think if it's going to happen, it's probably going to happen within the next 5 sessions.
All right, guys, we're coming up on that 8:30 hour. We have the ECB jobless claims and retail same-store sales throughout the entire morning. It's going to be a busy headline-driven market. Catch Scott at the end of the day as he wraps up the action on real money, options, profits, and T3Live.com.